What's going on, everybody? We're getting ready to talk about something that I am extremely excited about. I'm extremely passionate about. It is what I do in the stock market with ETFs and why I like ETFs so much. I've got a lot of texts and a lot of calls in the last couple of days about, hey man, what the heck is an ETF? Why do you invest in ETFs? What's the difference in an ETF and a stock? So I'm going to do my best to explain the difference between a stock and an ETF, and it's really not that hard to understand. And once I explain it to you, it's really gonna strike you, and it's gonna make you want to invest in ETFs. I think it's up to you, totally your call. I love investing in ETFs because you'll see it's awesome. So a regular stock, if you can invest in a stock is like Coca-Cola. Coca-Cola is a business, and they have a stock that correlates with how their business is doing. So if they have a lot of sales, they do a great job this year, their stock slowly works up. They do a bad job this year, they don't have as many sales, stock goes down. If you put all of your money in Coca-Cola today, it's high risk just putting your money in one stock, because you're hoping to God that your stock is going to go up, that company's going to do good. Please do good, Coca-Cola. And that's just too much of a risk for me. So I don't do that. What I do is I invest in ETFs. And what ETFs do is, so there are hundreds of ETFs that you can invest in. And what an ETF is, if you can imagine, an ETF is like a basket. And within this basket are multiple 10, 20, 30, 40, 50, 60, 70 stocks that this basket is holding. And this basket fluctuates depending on what the stocks that are in the basket do. So I'm going to use the example of the ETF ARKK, ARK Innovation. So what they do is they are geared towards innovation stocks. They focus on that sector. Most ETFs focus on a sector of the market. They have a category that they like to focus on. So ARKK is innovation. So in their basket, they hold 52 different stocks that are all geared towards innovation. And if those stocks do really well, then the ETF does well. If all of those stocks don't do very well, then the ETF doesn't do very well. The great thing is, if one of those stocks has a terrible day, my ETF doesn't hurt that bad because there's 52 stocks in this basket. And my ETF fluctuates up and down based on what the collective group of stocks do. Okay? Now, there's different weights of each stock. So to explain that a little bit, ARKK might have $1 million invested in the stock NEO, and they may only have $500,000 invested in the stock Tesla. Obviously, NEO holds more weight in this basket, so whatever it does, it will outweigh what Tesla does. But the entire ETF typically does what the collective group does on average for that day. And that is incredibly safe compared to investing in one stock. In one stock, I'm begging it to please go up so I can make money. Don't go down so I don't lose money. And that to me is dangerous with my money. What an ETF does is it takes all that risk away. It doesn't take all of it away, but it takes the majority of it away and multiplies the safety by 52 stocks. If the 52 stocks are up and down, my ETF is going to fluctuate with all of those stocks. So I have a much safer chance of my ETF going up. Now, the best part of ETFs, the absolute best part, turn your volume up and listen very closely. ETFs are managed by a person who is a portfolio manager, who is a professional stock trader, who their entire job, the reason they get paid millions of dollars a year, is simply to make sure that the stocks within my basket inside this ETF are successful. They put together what stocks go in my ETF, in my basket. I'm not a professional, and neither are you. Probably. You're probably not. I want a professional telling me these 52 stocks are going to go up. And why should I trust this person to decide that for this ETF? Because that is their only job, is to make sure that this ETF is successful over time. if she thinks, if the person that's in charge of ARKK, which her name is Kathy, if she does not think that NEO is a good stock for innovation anymore, she'll take that sucker out and put a new one in. That's her only job. So not only is my ETF safe because there are multiple stocks within my ETF, but it's also managed by someone who makes a ton of money to make sure this ETF goes up. That to me is as safe a place to put money in the stock market. You know, and she's banking on her income that ETF is going to go up. And so I feel pretty safe about putting my money there. That's me personally. I don't know about you. You might not think that's a great idea, but to me, it's as safe a place to put your money to ensure growth over a long period of time. ETFs are going to have bad days. They're going to have bad weeks. They're going to pull back and go down some every once in a while. But overall, her job is to make sure that they continually grow over time. And that is why I invest my money in ETFs, and that's why I think it's the safest place in the stock market for your money, and that is in ETFs. All right, I hope that explains ETFs. If you need me to expand, if you didn't catch what I put down, comment below. Comment below if this helps you. Comment below if this is stuff you're actually going to use, or if I'm just kind of sitting in my computer room talking to myself. Let me know. I need to know these things. So let me know what you think. I appreciate you guys watching, and I'll have more coming soon. Thanks.